Hi fellow traders, here is a quick update on GBP USD. Yesterday in my video of GBP USD, this is the head and shoulder I talked about, and I didn't tell about the exit plan in case of loss. So today I'm going to talk about two things. Number one, what is the exit plan in case of loss, because head and shoulder seems to be failing now, and probably what is the exit plan in case of profit now in case GBP starts falling again. So head and shoulder, which I spoke in yesterday's video, is this is the left shoulder, this is the head, and this is the right shoulder, which failed. So this was the movement when I made the video, and I was expecting GBP/USD to continue to the downside to 2450 area, but a set of events changed the direction of the GBP/USD, and here is what happened and what probably can happen today after the release of CPI. So let's look at what happened yesterday. GBP/USD was falling down, and then speech of chief economist of Bank of England Hugh came in the market, fading the expectation of June rate cut, or you can say he certainly made the June rate cut even more uncertain because of his emphasis on uh, uh, better ongoing economic things, for example, the uh, labor market condition and GDP. So what is next? PPI. So PPI came beating the expectation, and you can see there was a sudden drop to the downside, but it looks like traders put more emphasis on the negative revision in the previous PPI, which came in the very next moment, and market suddenly moved to the upside after this sudden drop. If the negative revision didn't occur in PPI, then this could have continued to the downside. So, but looking at the two things, I can I can say that it's more likely that we are not going to get uh, less than forecast CPI. Rather, it will be bigger than the forecast, more than the forecast, or it can be equal to the forecast. And I will tell you what may happen in both scenarios. So first of all, why I'm saying that it is more likely to see not less than the forecast CPI. Number one is inflation. Recently, in the last survey, if we look at the University of Michigan survey and the inflation expectation, it has risen from 3.2% to 3.5%. And if we look at the producer price index, it means if producers are paying higher prices, the prices have already been, or is generally somehow some way passed on to the consumers. So definitely if PPI increases, there are high chances of increment in the CPI. So these are the two factors why I'm not expecting less than forecast CPI. However, I will tell you the scenarios of what happens if CPI comes equal to forecast. So less than forecast is uh, almost improbable. So let's talk about the two situations. So my exit plan is, if GBP/USD starts rising, and if I see any candle on this 4-hour time frame closing above this high, whatever loss occurs, I will simply take the loss and I'll exit. But I will surely wait for the closing of the 4-hour candle above this high, because I don't want to get stopped out because of any spike like this. You can see nowadays market is overreacting, so there are high chances of getting spike and getting stopped out in case you place the stop loss. So I will wait for the 4-hour candle closure, and if the CPI comes better, then definitely there will be the huge drop, and whatever move we have seen to the upside in last couple of days will be erased in just a single day, because if we measure the movement, it is just 151 pips in 1, 2, 3, 4, 5 or 4.5 trading days. But if you look at the magnitude of fall, like here or here, you can see that the magnitude of fall can be more than 150 pips in just a one day. So that's why now we can easily get our first target, which is 2450, and then we can plan for further trading in case we get even 0.1% more than forecast CPI. What happens if we get the data exactly same as the CPI? Then also there is a chances of drop, but we do not know how sustainable the drop will be, because there are two factors in the market. Uh, traders are definitely trading against US dollar. They are putting all the emphasis on negative news rather than any positive news, and PPI yesterday was an example. PPI actually yesterday PPI beat the expectation uh, by almost 0.2, I guess 0.3%. I think it was expected to be 0.2 or 0.3. You can look at the economic calendar, but it came 0.5%. But emphasis was put by traders on the negative revision in the previous release. So it looks like market is already in the mood to trade against dollar. So even if CPI will come same as expected, there are chances of continuation to the upside in GBP USD, Euro USD, or you can say there are chances of fall in the dollar index. Another thing is uh, which probably uh, is just a conception that the market has already priced in all the negative expectation of the CPI, because the series of negative data started from non-farm payroll, then services PMI. So those numbers came less than expected, and since then the US dollar has been losing. So I think the poor non-farm payroll, poor PMI, and expectation of less than forecast CPI has already been priced in. So there are chances that if CPI doesn't come less than forecast, we may see some sort of fall, and market may correct itself. So then we will at least get a chance to exit at the break even, because I think this is where my uh, entry point was. I was making video yesterday while market was falling something around 25-30. So these are two probable scenarios, and I'm going to wait for the 4-hour candle closing, like I said, because I would want to see the effect of the news, whether I want to see whether it is sustainable or not. Because sometimes what happens, that you see the news came in the market, it moves the market for half an hour, 1 hour, and then markets changes the direction. It happened even yesterday, and I can say that the British data didn't move the pound. It was all about the uh, statements coming from Hugh Pill, who is chief economist of Bank of England, and then the negative revision in the PPI. Otherwise, market actually moved to the upside just by 10 pips, 10.1 pips. This is the candle. This, you can see this white candle. This is the candle uh, made after the release of uh, climate count change and hourly earnings from the UK, and the movement to the upside was feeble, and then market started going to the downside. So why it happened yesterday at this point, despite there was so significant positive data about climate count change and hourly earning? The reason behind this is it has already been expected since the uh, Thursday, May 9, that the labor market condition is good, GDP is good. So it was priced in. That's why it was no surprise to see a better labor market condition. That's why traders didn't jump into the buy position. Rather, the traders who were already into the buy position exited the market, and market started falling. And then traders found this as the new entry level, because when market is in uptrend, you can certainly I mean, you'll certainly buy the dips, right? Sell the rallies, buy the dips. This is what we do in the uptrend. So this was a dip, and then came Hugh Pill increasing the uncertainty about June rate cut, and that is when the people considered this as the dip to buy, and they bought, and then GBP started going up, and then the PPI, and you know all the story now. So my point is, if CPI comes to be equal to the forecast, we can see the downward move, because traders can exit, because they have been expecting poorer CPI, and that is what causing the downtrend in the dollar index, or you can say uptrend in Euro USD, GBP USD. So that's why it will be rather um, a good decision to see the effect for at least a couple of hours, like at least 2 hours, and 4 hour candle closure will obviously make you wait for another 1-2 hours. So let's see what happens, and we'll make the decision accordingly. Thanks for watching.